Good morning, Jags. This is Fahad. Today is Monday, January 25th. Let's get started. Quickly want to start with AMD. I'm sure you all saw in the first read this morning that Citigroup, right over here, it still has a sell rating on the stock with $13 price target. A sell rating and a $13 price target. This analyst, Christopher Danley, says that continued PC end market strength, and Intel's data center weakness, which means market share shift, to provide upside to AMD's Q4 earnings and guidance. As such, he opened a positive catalyst watch on AMD shares on expectation the stock to trade up after earnings call. Earnings are this week. However, he maintains a sell rating on the stock with a $13 price target. Danley continues to expect the pricing competition between Intel and AMD to intensify later this year, which will likely be detrimental for both. I just don't get it. I just don't get it. $13 price target and a sell rating on the stock while you're coming out with a note talking about how, the end market is strength in the PC business and the data center market share shift in favor of AMD is all going to result in upside in AMD's Q4 earnings. Therefore, it's a positive catalyst watch. Why the hell do you have $13 price target and a sell rating on the stock? Anyways, that's all I'm going to say. I have one stock on my watch list today, and that is AVLR, AVLR Incorporated. As many of you know, this is a former Jaguar top pick from, I believe, I don't even remember exactly what quarter it was, 2 years ago, 1.5 years ago, in one of the Jaguar quarterly outlook. But this company will be reporting earnings on February 10th after market close. And if you look closely, this stock has recently corrected, coming down from $184, high of 184, currently at 163. It has been building a base rather for the last couple of days and just recently started to emerge out of this base. MACD has corrected and started to give us a bull cross late last week. RSI has corrected and started to give us a bull cross and has plenty of room to rise again. This company will report earnings, and the channel checks that are coming out from Bank of America this morning are actually quite positive for this company. Now, I'm going to continue to monitor if there are more channel checks out there, because one of the concerns about AVLR has been that ever since the relationship changed with Wayfair, there has been concern that the growth rate will actually slow down. As a reminder to everybody that this software company provides a way for all businesses, small and medium-sized businesses, as well as large corporations, to use its software for tax collection efforts, sales tax collection efforts, as well as to make payments to for sales taxes to different states. It streamlines in the entire process. So, for example, if you have a company that operates in all 50 states, that's 50 different jurisdictions, and every state has different kind of sales tax collection efforts, the timing of when the payments have to be made, the amounts that have to be made, the type of sales that they collect sales taxes on. There's a lot of jurisdiction, and there's a lot of elements involved to make the calculation correct. And they have a very simple software to allow businesses that operate in multiple states to do that right from a single platform. And as a result, their software is used by a lot of accounting firms, a lot of CPA firms that, on behalf of their clients. So these channel checks that are coming out this morning are directly from these CPA firms. So let me just open these real quick. I have 4 of these. So here's one. This is a partner commentary that's an ERP partner. Comes out from Bank of America this morning when they did the channel checks, and they say, we have seen steady adoption of AVLR in the past quarter, mostly driven by ERP upgrades and continued move towards e-commerce. And then they go on to say at the last line over here, we have had strong pipeline builds in the end of 2020 going into 2021. However, the next 6 months face some uncertainty in some of the performance given pandemic trends. And this is exactly what you're going to hear from everybody. They're all going to talk about strong trends and strong commentary related to AVLR, but at the end, they put this disclaimer down towards the end that, hey, but the pandemic is still out there, the risk, we do not know how this thing is going to change. Here's a second commentary. This is an accounting partner, comes out and says that our AVLR business performed in line with expectations, and we have not seen any pandemic-related slowdown in the last quarter. We expect this steady adoption to continue for at least the next 2 years. Then here's a third one, and also an accounting partner. Our AVLR business is performing ahead of expectations due to COVID. We have not seen any slowdown since the peak of COVID. As businesses continue their shift to automation, we are seeing some early strength in the cross-border offerings as well as vertical specific offerings such as for telecom and the excise tax piece. Now, this is an interesting one because they're seeing early interest in these cross-border offerings. If you look at the last earnings transcript from the company, you will see that that is exactly what the CEO talked about in the earnings call, with that they are starting to offer all these cross-border offerings, not only just for sales tax, but also for excise tax and many other things. And seems like that could be an early adoption phase over here based on these comments. And the last one I have is also an accounting partner. They say our AVLR business tracked above our expectations due to the continual move towards e-commerce and remote trends. Overall, we're expecting healthy growth in the next few months as the states become more aggressive on collecting sales tax, which would something that we would expect based considering that every state is currently suffering from revenue shortfall. So based on these comments, there's good reason to believe that similar to the kind of a strong quarter that we saw here back on November 5th, and the stock had a nice bounce back then too, rising from a low point to 143 to 172, where we're trading pretty much at the same band right now. The stock hasn't changed much in 3 months. We should see another strong quarter over here. Now, I'm not going to give you any specific trades yet, but sometime before the earnings comes out, I will let you know in the chat room or in the webinar exactly how to go about making a play. With earnings on February 10th, chances are I'll probably do either a calendar or diagonal spread based on what kind of implied volatility difference that we will see between the month of February and March and the outer months. Would like to buy the lower volatility call options and sell same strike or higher strike front month higher implied volatility call options to basically create a spread that keeps theta decay and implied volatility slippage in my favor. So I'll let you know what the trade is, but for now, watch this stock, add it to your watch list. Channel checks are good, and this stock is starting to emerge from a base. That's it from me. Let's go to Jay.
Morning, everyone. So today I have an update on WWE, World Wrestling Entertainment. Last time I covered this stock was in the November 22nd weekend research report. At that time, shares were just above $40 a share. Right now, we're looking at about 55 today. But MKM Partners was out with a note on Friday, and in their title, they basically cited multiple call options for the stock. Now, I'm going to call an audible on item number 1 because I was going to talk about the strategic alternatives for its WWE network, its streaming platform. Because on the last call, WWE said that it had resumed conversations. Well, this morning, right before this podcast started, we got a press release, and it said Peacock and WWE announced a multi-year agreement that gives Peacock exclusive streaming rights to WWE Network in the US. Peacock will launch WWE Network on March 18th. So that catalyst is now out of the way. Keeping with streaming though, I do want to highlight that, I still think that there could be some sort of Netflix catalyst or a similar company because on the last call, Chief Revenue Officer Nick Khan talked about the possibility of live events via streaming, and he cited Amazon, with their NFL regular season games. And so the question is, could a company like Netflix want to take on some WWE events, whether that be their Raw SmackDown brand during the week or maybe a pay-per-view event every couple of months? They also did announce that they were doing a multi-part documentary on CEO Vince McMahon. So this is probably should be more viewed as a wild card, but I still think something like this could happen. Item number 2. Oh yeah, go ahead if you want.
Yeah, I just want to mention that I've been long call options in this one ever since you presented this bull case in the week in research on November 22nd. And I just want to mention that we have, there you can just tell that sometimes when we issue a research piece on a single stock, whether it's in the chat room, webinar, or weekend research or homepage or any place, where sometimes you can just tell that the client's interest is much stronger in that particular stock than compared to something else that we may write about someplace, and when you presented this WWE bull case on November 22nd, the amount of emails and the chat room comments and everything that I got, I could tell that simply by looking at those, everybody wanted to position into this one. They really like the story, and I think this may have had to do with 2 years ago when this was made a top pick, and the stock in a single quarter ran by 100% in a single quarter. Now, this is a huge catalyst, this Netflix catalyst that you had talked about over here, where is there a possibility that there could be similar exclusive relationship or content that could be cut with Netflix? I think that will significantly charge the bulls in WWE than what we have seen so far. But this is a good start. This is a good start that they got the Peacock so far. Now, the original trade that was recommended, just to complete my discussion, Jay, real quick, and then you can continue. But we recommended back then on November 23rd in the chat room to buy straight WWE April 45 call options for $290. I bought those calls doubled. Then when the stock was at 50, I rolled it to 50 strike, and then they doubled. Then I rolled them to 55 strike, and now they're starting to double again. And I'm looking forward to see how much high this thing is going to fly. Looks like we could see $60 today, which was my all-time target, basically pre-pandemic high. So these will double again the third time. Now go ahead, please.
Yeah, so item number 2 that MKM talked about is that for years WWE has collected small contributions from viewing of its content on YouTube and Facebook. Well, then they talk about the launch of the free tier of the WWE network and how that sort of sets the table for the company to steal some market share away from these other 2 platforms. And they then say that various technologies are being tested right now for layering in advertising with the free tier, but there's no timetable on this transition, but nonetheless, another possible call option. And then finally, in terms of financials, WWE's pay-per-view events in Saudi Arabia rank right up there with WrestleMania as one of the most significant line items on the P&L statement. So right now, MKM is currently modeling in one pay-per-view event in Saudi Arabia in Q4. But it's their opinion that if live events with fans are able to occur in Saudi Arabia by the middle of the year, it would make a lot of sense for WWE to prioritize this and get a second event in there, which would not be in any model or in any analyst forecast at this point.
Yeah, that Saudi's catalyst has also been a very, very important one. I think we've been talking about it forever. Purely technically speaking, just to wrap this up, as I said earlier, that $60 is probably going to be the first spot we're going to see this very quick, maybe today. There's minor resistance there only on the weekly scale. The bigger, heavier, thicker resistance on the weekly scale doesn't come into play until 68. So there's still a lot of room to run. All right, great stuff. Let's go to Chronicle.
Morning. I have an update on Meritage Homes, ticker MTH. I don't have much developments to report since I recommended this bullish trade exactly a month ago on December 23rd. But I wanted to bring this up because the company is going to report on Wednesday, and so there might be questions about whether or not to hold the stock into earnings and basically how to manage this trade. So back on December 23rd, I said that I was entering a half-size position, and what I was hoping for was for the stock to continue moving lower towards support at $80 so I could buy the other half. And then on January 6th, that's exactly what I got. So right now I'm currently long with a full position going into this earnings report. And so my short answer is that I'm continuing to hold this one and maintaining my original target of around $110. But I've also trailed my stop past break-even entry so that this is now a free trade for me of sorts, and I can no longer lose unless the stock unexpectedly gaps down below the stop. So basically, I'm not exiting yet, and here's why. First of all, the fundamental backdrop continues to be strong. Last week, we got the latest building permits and housing starts data, and Logically, building permits lead housing starts, but nevertheless, both numbers were very strong for December. Permits came in at 1.71 million versus 1.6 expected, and housing starts came in at 1.67 million versus 1.56 million consensus. So those are very solid beats. And then if we look under the hood at building permits by state, specifically Arizona, which is where Meritage Homes operates. Now, the government hasn't updated December figures yet for the individual states, but if we look at November numbers for Arizona, permits are still up very nicely for both single and multifamily. And you might argue that these figures are lagging data because we're already in January, but what I'll say is that building permits is a leading indicator because it basically tells you whether or not starts and deliveries are going to be better or worse in, say, 6 to 12 months' time. So I think on balance of probability, the company should report a solid quarter and solid guidance. Now, if we look at the chart of the stock, it's run up very nicely, which is the kind of price action I want to see. But what I don't want to see is if the stock begins to fail and get sharply rejected from here after having run up, which is exactly why I've trailed my stop to lock in some profits, even if it's small. Because if it starts to get violently rejected here, I think chances are the stock might end up going nowhere for weeks or even months, but I'm holding this into earnings.
Excellent update. That is correct. Last week when we got the I believe it was Thursday or Friday, where the new home starts and the new home permits data, it was ridiculously strong. And it's all reflected in this building permits right over here. Just absolutely crushing the estimates on the street and showing substantial sequential improvement month over month. Now the difference, Chronicle, as you mentioned yourself, that we're looking at the November data that we have available for Arizona market, for example, for this stock, and we're thinking that maybe this is lagging, but the data that came out last week was actually December data, right? So I think the same trends from November continued into December as well. And I have no reason to believe that they have changed so far in January, considering that the interest rate movements have been very little and nothing in the forward-looking channel checks or anything would have me think that they have basically changed. And then so finally the start is starting to break out as well. And just to give you a recap to everybody who's listening to it, the original bull case was presented on December 23rd. If you go to Jaguar Media and you do a simple search for $ MTH, you can listen to the video there. But it took a while. The stock wasn't breaking out. So then on January 8th, which is right over here, we reiterated the bull case for it. And we suggested that this is still time to right over here, staying bullish on home builder MTH. This was on January 8th. And then finally, it broke out recently. Very heavy volume. Nice uptick in RSI and the MACD levels. I think this thing is heading to new 52-week high. So I have no reason to believe that this stock is going to roll over given the fundamental background, the technical picture, and all that stuff. So, all right, great stuff. Thank you, everybody, for joining. We'll see you in the chat room shortly.